In recent years, there's been an explosion in social media. New sites in the moulds of Facebook, Twitter and YouTube have been springing up almost on a daily basis. We asked Graham Newman, Business Development Director, to tell us more about CFC's new product in this area.
The emergence of social media companies in the last few years has been absolutely fascinating. Brand new companies whose business models didn't even exist a few years ago have dominated the online space. They've achieved astronomical valuations and grown user bases the size of small countries. Take Facebook as an example. Let's compare Facebook to traditional media channels. It took radio 37 years to reach 50 million listeners. It took television 14 years to reach 50 million viewers. It took the internet just 4 years to reach 50 million users. Facebook took 9 months to achieve 100 million registered users. If Facebook were a country right now, it would be the third most populated country in the world. This speed of growth and rapid change in the industry has led to a unique insurance challenge. And when you couple that with the fact that they're in a formative and uncertain legal environment, you can see why obtaining insurance for these companies is actually really tricky right now. Our experienced team of technology underwriters have been watching this space for a number of years now, and we think we've spotted an opportunity to create a brand new product designed specifically for these companies that contains a modular policy form with all the key elements of their insurance cover in one simple, easy to buy and cost-effective package. That product is what we're calling 2.0.
With such a diverse collection of companies operating under the social media umbrella, it's a little confusing to understand what exactly fits the Web 2.0 classification. So, Graham, what exactly is Web 2.0?
Web 2.0 is a very broad term, but in its simplest sense is describing web applications that are user-generated content or user-centric content focused that have collaborative elements or social networking elements. So these companies are often referred to as social media companies or social networking companies. The best examples I can give you, probably the most high-profile social media companies, are YouTube, Twitter, MySpace, Facebook, and in the business world, LinkedIn. Recent estimates have said there's over 600,000 Web 2.0 companies operating right now, and this is growing on a day-to-day basis. Our appetite is very broad in this space, but at CFC we like to write the small to medium-sized enterprises. We're looking for companies with good, strong, experienced management teams who are well risk managed. We're not really looking to write the high profile or the biggest companies in this space, so that really means that YouTube and Twitter aren't ones for us. Also, we're looking to avoid explicitly adult content sites and peer-to-peer file sharing networks. Apart from that though, our appetite's very, very broad. We'll cover anything from simple photo sharing or social networking sites through to more complex location-based gaming or online dating companies.
Okay, so we're aware of all the benefits that the companies are enjoying of this new .com boom, but what are the risks that these companies face and how can they be insured against them?
I think the biggest challenge is that the technology has moved on very, very rapidly, but the law has failed to keep pace. The law that these companies are operating under is different in every single jurisdiction, which basically means that if something is totally legal and fine in, say, California, it may be totally illegal in London. We saw a great example of this recently with one of the biggest Web 2.0 companies, Google. In recent months, Google have been prosecuted in Italy for criminal defamation relating to content that was on their YouTube video site. Yet at the same time, in the US, again they had another case, a huge case, with a company called Viacom relating to intellectual property rights infringement, again for content on their site. But they won that case. So you've got two countries with two totally different laws. And the problem is, content is deemed to be published in the country in which it's downloaded, which makes it very, very difficult for these companies because they're operating on a worldwide basis. So I think the law is probably their number one challenge. The kind of cases that we see revolve around intellectual property rights infringement and defamation. But recently, we've started to see a number of cases relating to privacy, particularly the privacy of personal information that's stored on social networking sites. So the privacy policies and terms of use for these companies have been thrown into real scrutiny at the moment. The other slightly more worrying trend is around cyberbullying and grooming. Unfortunately, these cases are happening more and more often now. And people are starting to point the finger at the Web 2.0 companies themselves, saying that they should be responsible for managing the community that they're operating. So what we've done is try to design a policy that will react to all these major risks. Our 2.0 product is a combined form that covers privacy liability, cyber liability, media liability, professional liability, alongside a more traditional office package that covers commercial general liability insurance, property insurance, and business interruption. We think this product is the most comprehensive package policy available on the market right now for this type of company.
2.0 is available through our broker network in over 15 different countries around the world, including America, Australia, Canada, and the UK. If you'd like to learn more or find out where your nearest authorised broker is, then please contact us on the details showing on the screen now.